650. My office number is 508-999-8426 and my email address is gvasudevan@umassd.edu. So welcome to Finance 650, Financial Decision Analysis. What we do in this course is, this is like the core course for finance students, for finance MBAs, and also this would perhaps be the only course that non-finance MBAs would be taking. And in this course, we learn about the financial functions of a non-financial organization. So what are some examples of non-financial organizations? So a company like Walmart, a company like Microsoft, a company like BJ's, Home Depot, and so on. All of these are non-financial organizations. Okay. On the other hand, what is a financial company? So financial companies examples are investment banks such as JP Morgan Chase, Goldman Sachs, and investment companies such as Fidelity Investments, a hedge fund. These are all examples of financial companies. So usually, if you're a finance major, or if you're concentrating in finance, you take this course first and then you want to take courses consistent with your objective. So you might want to take courses in investments, investment banking, and so on. I just want to give you a brief introduction of myself. I'm a professor of finance at UMass Dartmouth. I've been here for more than 10 years. I received my PhD in finance from the Stern School of Business, New York University, and I do research in corporate finance, and I have published right around 20 papers now in some of the major finance journals. Prior to coming to UMass Dartmouth, I have been taught at New York University, Suffolk University, Northeastern University in their MBA as well as the Master of Science in Finance programs. So what are the requirements for the course? You want to make sure you buy the textbook, and the textbook is Fundamentals of Corporate Finance, Standard Edition, Ross, Westerfield and Jordan, 10th edition. You also want to make sure you buy the Connect. And it's very important that you purchase Connect. All assignments and exams will be posted on Connect. So clearly, without that, it's very difficult to continue with the course. And usually, they give you a grace period, I think, of 2 weeks. So let's say you want to register for Connect now. I think up to 2 weeks, you can use Connect without making any payments. So please make sure you start working on the assignments right from week 1. Okay. What else do you need? So there are 2 choices you have. So finance is a lot of problems, and typically for problem solving, you either need a financial calculator. So what I recommend would be the TI BA2 Plus, TI 83, HP, and so on. And if you need help with the calculator, these are the links. So there is a website by a professor that gives you a tutorial for most of the financial calculators. Now, especially if you're taking the online course, and chances are you might perhaps prefer to use Excel, and that's a good idea because a lot of the time in the workplace people tend to use Excel. And if you use the same link that I have here, it gives you instructions on Excel. And what I also plan to do is that I will post Excel spreadsheets that can help you do the problems and use it for different types of calculations. Now, what are some of the objectives of the course? The first is acquire familiarity with the ethics and foundations of financial theory and apply them to the analysis of financial statements. So, to the introduction, we'll talk about some of the ethics, and we'll also talk about the foundations of financial theory. And in chapter 2, we'll talk about the financial statements. So, the main financial statements are, we have the cash flow statement, we have the income statement, and we have the, so these are what we see. And we also want to apply the valuation techniques to financial assets and to capital budgeting. So in chapters 5 and 6, we will talk about the time value of money. So basically in finance, what we say is that the value of an investment is the present value of the future cash flows. So chapter 5 is the basic, or that is the foundation of this course. So one of the things I always stress is that you want to make sure that you are comfortable with chapter 5 and especially with chapter 6. So what we learn are, we will learn quite a few techniques that are simple but very powerful. So you might never take a course in finance. Chances are you want to buy a house, and when you buy a house, you want to figure out what are the payments I have to make. That's one example. You might want to buy a car. Again, you might want to find out the payments on the car, or you might have to decide on the purchase versus the lease decision. That's another example. All of us want to save for retirement, and again, you might have an objective. Let's say you want to retire at age 55 with $1 million. So all of these are practical applications of the time value of money. So I think it's very important that you become very comfortable with this material. I think once you are, the rest of the material tends to be relatively straightforward. You also want to be familiar with models designed to evaluate and manage portfolio risk. So in finance, what we typically try to say is that there are only two things that matter. One is the risk of an investment, and the two is the return of the investment. So in this chapter, we will talk about portfolio risk and portfolio return. So what does that mean? So we say that we have a portfolio of investments when we have at least two of them. So let's say you have two stocks, that is a portfolio. Or you have a stock and a bond, again that's an example of a portfolio. And here we will talk about how you can find out the risk of the investment, how you can find out the return of the investment, and 3, what is the relationship between the risk and the return. We'll also talk about the advantages and disadvantages of the various capital structures. So, for example, if you look at a company such as Oracle or Facebook or Microsoft, what we find is that most of the financing is in the form of stock. They tend to have very little bonds outstanding, or they tend to borrow very little money. On the other hand, if you look at a company like Walmart or a company like Home Depot and so on, they tend to have a reasonable amount of debt, maybe 40% and so on. If you look at a company, let's say the parent company of Stewart Hospitals, okay? So Stewart Healthcare, that has become very big in Massachusetts. And the parent company, that is a hedge fund, or that is a private equity firm. And when you look at a private equity firm, what we find is that they tend to finance 90 to 95% of the capital by borrowing money. So they only have 5% of equity. So basically here we talked about 3 different cases. A software company could be financed all with stock. A company such as Walmart or Home Depot might have maybe 40% of debt, and a company such as Stewart Healthcare could be financed 95% with bonds. Now, why do we see such differences? So that is what we want to address in this topic. And essentially what we will find is that what really matters is the tax advantage of debt versus the risk of having debt. So just like you and me, the tax advantage of having debt is that the interest payments are tax deductible. So let's say you buy a house, you take a mortgage, you will find that the interest payments on the mortgage are tax deductible. So that tends to be the same advantage for corporations. Now, what is the disadvantage of debt? Just like you and me, if you borrow a lot of money, there's a high chance that we might end up in financial trouble. We might not be able to make the payments on the debt. So that is the disadvantage of debt. And essentially here, what we are saying is that a lot of the time, the choice of financing tends to be a trade-off between these two. That is the advantage of debt versus the disadvantage of debt. We'll also talk about the need to determine the cost of capital and selecting the optimal projects for the capital budget. So chapters 9 and 10, that talks about capital budgeting. So in chapter 9, we will talk about the basic ways that are commonly used to evaluate an investment. So they tend to be the payback. We will talk about the net present value, we will talk about the internal rate of return, and we'll also talk about variations of these. So we'll talk about the pros and cons of using each method for evaluating investments. Now, if you look at the textbook basically says that the best method to evaluate an investment is the net present value. But if you look at the industry, the choice between the internal rate of return and the net present value is almost equal. So 50% of the people in the business prefer the internal rate of return, while 50% prefer the NPV. So we'll talk about why that is true and what are some of the problems with the internal rate of return and how we can fix them so that we can use them effectively. We'll also talk about the effective ethical use of financial markets to raise capital. So what does it mean? Companies go to finance their investments, so they have to issue bonds, they have to issue stocks, and so on. So we'll talk a little bit about how companies need to, for example, reveal the information as properly as possible and as completely as possible to the financial markets. And the reason being that this is not a one-time choice. If you are a company, chances are you will have to go back to the markets again and again to raise money. And given that, you want to be as effective and ethical use of the financial markets. We'll also talk about the decisions with respect to leasing and refinancing. Okay, so we want to talk about the grading policy. Okay. So what we see here is that there will be two exams, exams 1 and 2. Then we have a final exam. They will also have assignments, and finally there will be participation on the online. So basically there I will have a blog or I'll have a discussion board, and typically I try to post like 4 or 5 questions based upon the chapters. So you want to make sure that you do participate in the blog. That's very important. And also you want to make sure that you look at the due dates as for the assignments, and you want to complete it on time. Typically, I do not give extensions, so that's the main reason why you want to make sure you complete it on time. Okay. Now, what are some of the steps to success? I think the main things you want to make sure are you don't want to wait, because typically there are assignments on a weekly basis. So especially if you have a non-finance background, I think it's very important to start early and to start earnestly. Okay. And all the materials will be posted on my courses, and for every topic you will find a folder that has the lecture notes, the problem sets, and the solutions. Now, the main reason why I post the problem sets and the solutions is because for some of the chapters, once you study the chapter, you might need some more practice. So you definitely want to take a look at these problem sets. And what you'll also find is that on Connect, I do post 2 sets of problems. One is a practice problem, and the second is an actual problem. So you want to make sure that both the practice as well as the actual problems are completed on a timely manner. And the reason why I say that is because usually there will not be any extensions given. And also please make sure that you are available to take the exams on the date given in the syllabus. And I try to stick to the syllabus, which means that you definitely want to be aware and available to take the exam on those dates.